Handle Your Business, a weekly podcast discussing a little of this and a little of that. Handle Your Business appropriately blends serious topics with fun topics, all in an effort to help you have a good or better life. So join me, your host, Lady Lashley, and some amazing guests every Sunday at 5 p.m. to explore everything from financial management to dealing with relationship challenges. Put it in your calendar every Sunday from 5 p.m. Tune in to Handle Your Business to get you ready for the week ahead. For more details, follow at Lady Lashley TT on Instagram and Facebook. Handle Your Business. Welcome to another episode of Handle Your Business with yours truly, Lady Lashley. I have returning our in-house expert when it comes to all things insurance and these sorts of things, Jessel Alexander. Jessel, thank you for joining me one more time.
Thank you. You make me feel so special. Thank you so much.
Listen, it's not me, it's just your light shining through. The listeners,
thank you.
They really taking in everything that you're saying. So
I appreciate it.
When it's nice, you have to do it more than twice.
Okay.
All right. So Jessel promised us that she'll do some homework on this very interesting, and I don't think that this is a very common topic in Tobago and Trinidad and the region, amongst the common people, that is, but we'll see. We are talking trusts today, right? And in insurance terms, Jessel and they have what you call a irrevocable life insurance trust. I believe there's also the revocable ones, but she will guide us. Jessel, from my understanding of trust, and like I said, this thing came new to me as I was searching. I always know about it from TV and hearing them rich people sign up their documents and saying that they have trust and so on. But when I was doing some research, as I told you before, I realized that, okay, that it's an option for us in Tobago and Trinidad, and even in the region where your company operates. What my understanding of trust is that trust is basically to protect your assets, decide how they're going to be used, who it's going to, and all of that. So like when you pass on as an individual, you get to say, well, okay, this goes to this person in this quantity or however amount. And I think that there's a technicality in terms of the difference between a trust and a will. So let me know if I get that correct. I know that we did wills before, and that episode is out for people who want to go and listen to that, so you'll know the difference. But today we're dealing with trust. So Jessel, tell me if I got an idea as to what a trust is based on your understanding.
Good afternoon. Good day. Thank you for having me again. So yes, you have an idea. It's along the right path. But today I would want to stick with the irrevocable life insurance trust. But just for a simple definition, a trust is a vehicle for holding or managing property. The basic arrangement involves the transferring of property to the trust where it will be held, it will be managed, and it will be disposed of according to the grantor's direction. So you can put property in trust, give direction to the trustee, and they would then do as you have directed. But when we talk about irrevocable life insurance trust, it's actually very different. And what that is, it's a trust that is created to protect spouse and children. And in Trinidad and Tobago, we don't really call it an irrevocable life insurance trust. We call it the beneficiaries under the Married Persons Act.
Oh.
So I don't like to use jargon, but for today, I'm going to have to be using the terminology. So the beneficiaries under the Married Persons Act would be a husband or a wife and children. These persons are protected by the laws of Trinidad and Tobago as it relates to benefits that are due to them. So a policy, a life insurance policy for the benefit of a husband or a wife or the children shall create a trust in favor of those persons, the husband, the wife, the children, and the money payable under any policy shall not form part of the estate of the insured. And all of this in simple language means this. I, as a wife, I bought an insurance policy on my life, and at the inception of my policy, I named my husband and children as the beneficiaries. Immediately, my spouse and children are protected under the Married Persons Act because I have just created an irreversible life insurance trust. And what makes this a very good tool is it protects your family from the creditors, persons you may owe, so you may have debt. So when I pass my estate, if I'm owing different people, these creditors can make a claim against my estate. But if I had created an irreversible life insurance trust, which I would say it's the Married Persons Act beneficiary, then my life insurance policy does not form part of my estate. So it is removed from my estate. So my creditors cannot access the funds there.
This alone is just fantastic. It's just
what do you mean?
It's just fantastic because when you think about Jessel, we're living in a world that's at this point in time predicated on debt, on credit.
Yeah.
So you can't live right now any kind of real proper life without owing people, whether or not you are a business owner or a regular person. You're either going to owe the bank for a car, for a mortgage, for whatever. So you just automatically presenting us with an opportunity now where people can feel safe to know, well, okay, I could take this option and protect my spouse, my legally wedded spouse, and the offspring. Quick question with respect to the children. I know you heard our wills episode that had to do with non-biological children. Like if you adopted a child, or if it's like a stepchild, well, you have to adopt the stepchild for the stepchild to be considered your child. So in this, and I'm not familiar with the Married Persons Beneficiary Act right now. That's why I'm asking. Those children, for those types of children to be covered, non-biological, to be considered under the Beneficiary Marriage Persons Act beneficiary, to get the irrevocable trust. If it's not my biological child,
we have to legally adopt them.
You have to legally adopt them.
Yes.
All right.
You know, in the Caribbean, the child comes and lives with us, and everybody say, yeah, that's my sister or my brother. But there must be the legal adoption of the child.
To be covered under this particular insurance.
Yes.
And just one more thing before you go on. When you say irreversible, we put the beneficiaries down when we take out the policy. Is it that absolutely no changes can be made? If I am married, I divorce the person, marry another person, can I add my new spouse, wedded spouse? Can you add children? If you got additional children, can they be added?
No. And which is why we are going to talk about this step by step.
All right, go ahead.
Because it's an excellent tool for securing the future of your spouse and children. But in our Caribbean dispensation and how we as a people behave, there are some drawbacks that can be experienced because of it. Right? So it really is an excellent tool to protect your family and the financial interest. However, as you just said, there may be a divorce. And I can tell you that we have had situations where persons would have fallen under the Married Persons Act. And then at the point in time that the policy was done, the marriage was fantastic. Everything was well. We were in love. and then 15 years later, that picture changed. And we have seen where persons come into the office and say, I need to remove my ex. Unfortunately, for that person, we cannot just remove your ex. An irrevocable trust was created. And I mean, that is something that we have seen time and again. Because initially, you want to protect your family financially. And then when things change, you realize, no, I need to remove this person. It is not as simple as that. You cannot just walk in and say remove. The other thing about the irrevocable life trust, and again, you were alluding to it, at the time you took it, you had a wife and one child. About 2-3 years later, the family expands and there's now a third child. A second child. This child cannot be added because there's no change. You can't change it like that. So the child cannot be added. So in a situation like that, you may decide to take another insurance and have that child as a beneficiary on the other insurance. So when a person decides to create an irrevocable life insurance trust, it is something that has to be thought out. You need to play the scenarios in your head. What if? And then make your decision based on what you think would be in your best interest and your family's best interest. But I would add here that just as there is the irrevocable life insurance trust, there is also the revocable.
Right. I have another question to cut it briefly. The irrevocable life insurance trust, you say, fall under the Married Persons Beneficiary Act.
The Married Persons Act of Trinidad and Tobago.
Right. The thing about it is, does that mean then that I can't create an irrevocable life insurance trust for my children only, for my offspring?
Yes, you can. Yes, you can. So if a single parent, somebody who is a single parent, does the same thing, because it covers spouse and children and all. So a mother comes in and she says, I have 4 children and I need some life insurance. I'm concerned about my children's well-being. Once she names those 4 children, at the inception of the policy, the trust is created.
Right.
So there's no spouse involved here. It's just she as a mother and her 4 children are the beneficiaries, and their benefits are protected under the laws of Trinidad and Tobago.
Right. This one seems to be catering for, if you're strategic about it and you are alive, people who have gotten to that point, let's say upper 40s, 50s, 60s, whatever, and you have the assets and you want to protect and actually share them up in a way that, one, well, the protection, nobody coming for it, but you're sharing it up in a way as well that none of these children of yours can fight each other after you passed on. So it seems like that kind of strategic instrument, as opposed to if you're younger, in your 20s, when we hot and sweaty, we now married, first time there in your 20s, you might have the first child, you might not foresee having another child, or, it might be some years off. While it's still an option, it does seem as if, as you said before, you really have to go through a whole lot of what ifs.
Have to,
because your foot and what in your marriage yet.
Very correct.
You have to go through a lot of what ifs. But I still like the option. What else do we need to know about this very special instrument called the Irrevocable Life Insurance Trust?
So, as I said, the benefit is you protect your family, but Let me say the drawback. What can be seen as a drawback
Mm-hmm.
would be situations like if the marriage doesn't work out, and then uh, realizing that you just can't remove the person. Sometimes though, when a divorce happens, what can take place is if the only irrevocable beneficiary at that point in time when the policy was done would have been, let's say, a wife,
Mm-hmm.
and there were no children involved, so it was just the wife alone. And then 15 years later, the marriage ends in divorce. The ex-husband who owns the policy, if he can get his wife to agree to remove herself as the irrevocable life insurance trust beneficiary, then that can release, so to speak, the policy back to him. But
Mm.
I can tell you that hardly happens.
Yeah, I mean, yeah, we
It
know.
hardly happens. What? Remove myself?
Yeah.
I work hard for this.
As the Christian people say, Jesus only walked the earth once. He
Yes.
not here
So,
again.
so it's rare.
Oh,
It's rare that particularly a wife would want to remove herself as the
yeah.
irrevocable life insurance trust beneficiary.
But what if there's no divorce? Can the wife in that case ask to be removed? Or it's no?
Yes, yes. So let me give you another scenario that I remember having experience with.
Mm-hmm.
Um, Life insurance policies can also be used as collateral at a financial institution. And there are some institutions, if if you want to use the life insurance policy as collateral, they may ask you to remove all beneficiaries because they want to have a first claim. So if it's a scenario like that, the husband and wife are still going on. We are in a nice marriage, things are well. But at the point in time that we are looking to do a mortgage, the husband is no longer insurable, but he has this insurance policy for the last 10 years when
Mm-hmm.
everything was well with him. In a situation like that, she can choose to remove herself as the irrevocable life insurance trust beneficiary, and the policy then reverts to a state of estate, and he can now use the policy as collateral at a financial institution.
Right, because then they can claim against it.
Correct, right? So they get their mortgage, the policy is assigned, and she would have removed herself as an irrevocable beneficiary. So it's not all bad, right?
Okay.
It's
Okay.
not all bad at all. But most of the instances, it tends to be a fallout in the marriage, and then you have those emotional issues rising, who don't want to move, who want you to move, that kind of thing. So these
Yeah.
are all things that you need to think about. And one of the ways you can get around that is by having a revocable life insurance trust, right? And the revocable, well, of course, as the name says, it means the beneficiary can be removed. And the beneficiary can be removed without the consent of the beneficiary.
Right. But what's the difference between the revocable life insurance trust and the regular life insurance policy?
So the regular life insurance policy would, in most cases, we probably just have your estate as beneficiary.
Mm.
And when it's estate, then it falls into that category of wills that you would have done because your estate is what needs to be probated. So if you have a life insurance policy and the beneficiary designation is estate, that falls for a will to have to be probated and all of that.
Right.
When you have a revocable life insurance trust named, and it can still be a husband or a wife and children. However, what needs to happen is you take out the insurance policy, you put estate as your beneficiary, And then after you've gotten a contract, you now choose to name a beneficiary under the revocable insurance trust. And you can still name your spouse and children in that same scenario. A major difference, though, is if it's under the revocable, they are not protected by the Married Persons Act. And then you can have a situation where creditors can lay claim if you are owing at your death. They can lay claim if they know that life insurance proceeds are being paid to your spouse. They can lay claim against it.
Right. One question though. Can you take out an initial irrevocable life insurance trust without putting any beneficiary at all? Let's say that you don't have a wife, you don't have no children, but maybe you intend to have a child. You can't do that. You must put a.
Do that. It has to be a person. There must be a name, a date of birth, and a relationship to you.
And the relationship to you. And coming back to the irrevocable one, I remember many years ago, for one of my life insurance policies, I wanted to put a name as beneficiary. And the insurance agent said to me, no, don't put it now. You could always change it afterwards.
Yes.
What was that about? Is that
so when it's done after the policy has been issued, it falls under revocable. Now I would share this with you. I worked for company A, but I also had insurance with company B. At company A, where I work, when a policy is issued at the inception, if I name my husband and children, I would have formed an irrevocable life insurance trust. If I wait for the policy for me to get my contract in hand and then apply to add my husband and children, they automatically fall at company A. They automatically fall as revocable beneficiaries, which means that I could change them any point in time. The marriage don't work out. I inform the company that I want to remove my husband. There is no issue. I remove him and so forth. However, the policy that I had at company B, I had that policy for a number of years. And I went there and I said, I wanted to change from estate to put my husband. But company B said to me, even at that time, that if I put him on, I would be creating an irrevocable life insurance trust. So there was a difference in terms of how the two companies saw spouse and children. At my company, you can choose whether you want the irrevocable trust to be created or you have a revocable trust. But company B, at that particular company, once you are naming spouse and children, whether at the inception or after, at that company, it falls under irrevocable life insurance trust.
Wow. So this is a question then, one for those of us trying to get insurance, we have to ask, or insurance agents need to explain that to us.
Correct. But and you see, because a lot of people are just not aware in terms of how life insurance proceeds are paid, many persons don't ask the right questions, one. And sometimes probably agents may take it for granted. I don't know. So I don't know. But persons need to know the different scenarios and how it can affect their loved ones.
Because in that second scenario, with company B, where the advice is, the information is here now, if you put your husband and children, you are now forming an irrevocable life insurance trust. What if you put just the children only and not the husband? Would the same apply?
Same thing. Yeah, because remember, the Married Persons Act covers spouse and all children.
This is very interesting. And now you have me thinking that I may need to ask a few questions of a few people because after I've had offspring, for the little things that I have still going on, I went about making the necessary changes. I know I had an instrument where I had a relative on it,
Mm-hmm.
and because at the time when I took it out, man, I had no children at all, no
Right.
children, no marriage, nothing like that. So
Mm-hmm.
I had a relative on it, like a sibling.
Yes.
And many years later, after I've had offspring, I went and I removed the sibling because the sibling
Right.
is grown with their own family and
Mm-hmm.
all of that.
Yeah.
And I put my offspring
Offspring. Mm-hmm.
on it,
Mm-hmm.
but even in doing that, there was no real conversation from the institution telling me anything. I just went and said,
Right.
hey, when I
Right.
started this thing, I had so and so on it. I want
Mm-hmm.
to change it to so and so, please.
Yeah.
They print
Yeah.
out the documents, give me the thing, and say,
Mm-hmm.
okay, sign here,
Mm-hmm.
initial there. And
Right.
that was that. So in listening to you now, I just even realized that sometimes we go about, our business and never really have any conversations, even if the
Correct.
conversation is to simply say, well, okay, this doesn't affect anything in any
Right.
other way other than this is
Mm-hmm.
what you're doing.
Or simply
Um,
what would happen if that a simple question, what would
yeah,
happen if?
because
So that
many of
you
us don't know to ask those things.
correct. So you get an explanation because you really want to know that you're doing the right thing.
Yeah. This is super interesting. Notwithstanding the potential drawbacks of the irrevocable,
Mm-hmm.
I think I'm in I'm in
And
favor of it. Yeah, because Jason, listen, I
to
can't say
protect,
what I'm thinking, but
no, to
this
protect.
place full of sharks, and these
Correct.
people will
To
come at you and leave your
protect.
children with nothing.
Mm-hmm.
Exactly. So
Yep.
you
To
need to
protect.
protect your family.
Yeah.
You need to
Yeah.
protect your
Yeah.
family. I mean, you need to know that you're with a reputable company offering you a decent
Mm-hmm.
instrument.
Yeah.
And another question I want to ask, because of the fact that this is, irrevocable, specific to the irrevocable one, is
Mm-hmm.
there any limitations in terms of the value of the insurance policy?
No.
Like, must you have $1 million policy, or could it
Mm-mm.
be a two
A
hundred and
hundred
fifty
thousand.
thousand, 100,000?
Yeah, yeah. So it's
Okay.
not about the value or the sum assured that a person has. It
Mhm.
simply is I want these proceeds to protect my family and my family alone.
Right.
And as you rightly said, in this time that we are living in, there are very, very few people who have no debt. Very, 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 very few people.
Yeah, you'll be a 5-year-old if you have no debt. By the time you're a teenager, you're owing your sister
Right?
$200.
Right? So it's a good way to protect the
Yeah.
financial interest of your loved ones. Very,
So
very good
a
way.
critical bit now. Many of us we have policies and they lapse or we ain't pay
Mhm.
them or whatever, whatever.
Yeah.
How does that work with the irrevocable life insurance trust? They are gonna come and put us in jail, or
No,
it just lapse the same way.
no. Once a policy lapses, it means that the insured no longer has insurance coverage. So right away, the irrevocable life insurance trust beneficiary has no claim.
Right.
There's no claim. And I just did a program, and one of the areas that we dealt with was cohabitation, or as we call it down here, common law relationship. And common law, as it stands today, a person in a common law relationship is not covered under the Married Persons Act, even though there is an act that covers cohabitation relationships. It does not, under the life insurance trust, common law relationship doesn't enjoy the same benefit of being protected under the Married Persons Act for a common law person.
Wow, okay, okay. So if you do an insurance policy and you put your common law spouse name, that's sort of like automatically a revocable life insurance policy.
Yes, yes, it's
Right.
that a common law relationship is not protected by the Married Persons Act as it stands today.
Wow. That's kind of interesting, because in our society, Tobago, Trinidad, the region, for whatever reasons, many people never get married at all.
Correct.
But these
Correct.
people actually end up building homes together.
Yes.
They sometimes rent property together and so on. So if you have your insurance, you never marry the woman. I'm saying that because we're still in a society where the onus of marriage is on the man, right? So you marry the woman. And then now the bank come to claim on your rental property or you didn't finish the mortgage. It means that insurance policy that you're left thinking that your common law wife will get some money from that. The bank or whoever else that you're owing can claim against it because it's in the estate.
Yes.
So all these, oh gosh, I have to go back to my lawyer friend there because now it means I am a common law spouse. The bank and everybody has to get paid before I get my pay.
Yeah, from the estate. They can make a claim. They can make a claim against your estate.
Oh, this is, you see, I've always been in favor of marriage in the business sense, in the way that the Americans and they carry it out. I think for us, we focus on marriage for love and being dumbfounded and being in lust. But one thing that America taught me is that marriage has a lot to do with the business, the institution of the partnership, protecting your mate, protecting your offspring and so on. You can't do certain things, just like that. You have those things that they work into the system. I was thinking is America, everything that they're doing falling right in our backyard now.
Yep.
All right.
And you see, the thing is, legally, cohabitation would be a male and a female not legally married to each other. In our society, I'm living with a guy. We've been living together for 10, 15 years. If I go out, I introduce him as my husband.
Exactly.
This is not my boyfriend. No, this is my husband. And sometimes people may not even know that we are not married because we are together all the time and so forth.
Yeah, big picture and all kind of thing.
Correct. At the end of the day, if we are not legally married, then the benefits of being protected under the Married Persons Act, we would not be able to benefit from that.
Let me ask you this before we go.
Yeah.
There's an insurance policy, and I was just explaining this to someone maybe earlier this week, that offers what I know to be, the term presented to me many years ago was a silver lining, where like you put an age down, maybe a potential retirement age, 50, 60, whatever. And once you are alive at that age, you get a lump sum payment to you. And then the other part of the payment will have to do with when you die, when you pass on. That goes to whoever you left as the beneficiaries. Does that apply in an irrevocable life insurance? Can you have a life insurance policy that has that silver lining offer, and it is also still an irrevocable life insurance trust? Yes,
because you see, it really doesn't matter what kind of life insurance you have in terms of the product. With the irreversible trust, what we are looking at is the proceeds from this life insurance.
Right. After you transition.
That's right. How are these proceeds to be paid? And to whom? And with the to whom, if it's spouse and children, are they covered under the Married Persons Act? Or are they revocable beneficiaries? Or is it that you left it to your estate?
Right. Okay. One technical question, and I might go back to the attorney with this. With respect to the payment of it, with the life insurance, irrevocable life insurance trust, can you leave a greater percentage to the children? You can choose how you want it shared up. I know, like,
That's right. Okay. The choice is all yours.
Right.
And you know what's interesting? Again, husband has a wife and 3 children. He can say, I'm leaving 70% to my wife, 10%, 10%, 10% each child.
Right.
They cannot come to the insurance company and say, but daddy had said to me that I was getting more you can say it.
Yeah, but of no relevance,
That's
no
right.
consequence.
This means nothing because it's covered by law.
Okay. Is this taxable? Is the irrevocable life insurance trust taxable?
No. In Trinidad and Tobago, as it stands today, the
Mm.
proceeds from life insurance policies are not taxable.
Okay. Okay. Okay.
Mhm.
Wow. This is quite something. A few people.
I think you have some stuff you can talk to the lawyer about,
Yeah.
that he can give more insight into the legal thinking behind some of the acts and what it means for us.
Yeah, because the only technicality I see in there, which we will explore, and I mean he explained it in detail in the will. I know we don't
Mm-hmm.
like to hear these things in our parts of the world,
Mm-hmm.
but the fact of the matter is, not because your non-biological child has been with you since whenever, if you
Mm-hmm.
have not legally adopted them, then in
Yeah.
this instance they have nothing to get.
Right. So
You
all
have
of
to
these are things
find.
that we really should be educating ourselves with,
Yeah.
because everybody, one way or the other, everybody is affected by, even if it's not life insurance funds, we have investments or bank accounts or credit union accounts. Everybody is affected one way or the other by
Yeah.
by these issues. So it makes sense to educate yourself, know what happens, know what is going to happen, or simply, we live in a very small society. So when Mr. Harry up the road passes, you hear the family saying, XYZ. Take it as an education for yourself
Correct.
and sort
Correct.
you out.
All right. Well, in the last 2 minutes, Jessel, if one of the beneficiaries, well, let's say particularly spouse, if the
Mm-hmm.
spouse dies before you still
Right.
can't change the
There's
spouse, or
a
you could add a
there's
new
a
one.
there's a there is a legal framework for how that can be done. If I remember clearly, um, with irrevocable life trust, the the spouse who has passed, the proceeds actually now belong to the spouse's estate. Huh? Talk talk to your lawyer
The
about
lawyer.
it. Yeah,
All
but
right.
I know that is how it used to function. I don't know if it has changed in law,
Yeah.
right? But these are some of the things that you can ask him to clarify for us.
Most definitely. Attorney at law, Kern Edwards. We're gonna do the episode after this one because we have to
Yeah,
we have to clarify
clarify. Yes,
some
clarify
issues,
that.
some issues here. Here, that Jason. You always giving me some serious gems, some nuggets. You're living your life, as I told my daughter. She asked me if I ever think that I'm an idiot. I say, well, I don't use the term idiot because I'm from Trinidad and Tobago, so I might tell myself, you're a real stupid boy.
Yes.
And it's just in these kinds of situations. Sometimes you think you know things and you don't know it,
Yeah,
and you're always
yeah,
learning. And that's
that's
why I
right.
like to refer to the professionals. This is your area,
It
even if you
is.
have to keep yourself in training.
Yeah.
It's important to refer to the people who are in the industry and can
Mm-hmm.
update us with the most relevant information. Let me thank you so very much for
I
doing all the
appreciate the
homework
time.
for this.
I appreciate the time. Thank you so much.
Yes, yes, we have to work on a TV show because I think when people see your face, we,
Lady,
we might get them to organize the things.
lady.
Although I like to be behind the camera, behind the scenes,
Me too.
I will tell you that I am my passion at heart
Mhm.
is to produce. I like to be in the
Okay.
producer role. So don't worry,
Well,
man. You have what it takes to be in the front of the screen. We starting off with no on camera times now, but
okay.
maybe in a few years we'll be able to have a little prime time spot somewhere. Because
Speak it.
we always have to
Speak it
educate.
into being.
We have
Speak
to
it into
educate.
being.
We have to educate our island. So many things that we need to put into action in Tobago and the region.
Mm-hmm.
And that's a good thing about the information you're offering. It's not just helping us in Tobago and in Trinidad, but a lot of people throughout the region, when they listen, I know I have a good friend in St. Martin, and he sent me a voicemail going crazy off of your voice. He's like, oh gosh, that woman voice, but he learned so much. It wasn't just that you were sounding good to listen to. The people are learning. So
I'm glad. I'm very glad.
Yeah.
I think because knowledge, when we know things, we have a responsibility to act based on what we know.
Correct. Thank you very much, Jessel.
Thank you. Have a beautiful evening.
Yeah, we've had this conversation so that when you listen to this podcast episode, you would be able to handle your business.
Handle Your Business, a weekly podcast discussing a little of this and a little of that. Handle Your Business appropriately blends serious topics with fun topics, all in an effort to help you have a good or better life. So join me, your host, Lady Lashley, and some amazing guests every Sunday at 5 p.m. to explore everything from financial management to dealing with relationship challenges. Put it in your calendar every Sunday from 5 p.m. Tune in to Handle Your Business to get you ready for the week ahead. For more details, follow at Lady Lashley TT on Instagram and Facebook. Handle Your Business.